This grandmother never trusted banks, not because she was old-fashioned, but because in her lifetime, she watched a currency collapse. Savings disappeared overnight, and then people who thought they were safe wake up with nothing. But that little box of gold, it survived all of it. So when people ask me why anyone buys gold, I think about that box. Every time the world gets chaotic, gold does something strange. People who ignored it for years suddenly wants it. But why? Is gold actually special? Or is it just the world's oldest financial superstition? By the end of this video, you'll understand three things. Why gold has lasted 5,000 years as a store of value. Why it sometimes fails, and most people don't talk about that part. And the three ways everyday people actually invest in it.
How much for this donkey? 3 gold coins. How much is this?
$500,000.
Do you accept gold?
Gold is, technically, just a metal, but it has 4 qualities that almost nothing else on Earth has, all at the same time. 1, it doesn't rust or decay, unlike iron, unlike paper, unlike most things humans have ever used as money. 2, it's rare, but not too rare. All the gold ever mined in human history would fill roughly 3.5 Olympic swimming pools. Scarce enough to be valuable, not so scarce that it's useless. 3, it's divisible. You can melt it, reshape it, cut it without destroying its value. 4, everyone agrees it's worth something. A farmer in 900 AD and a trader in Tokyo today would both accept gold. That's extraordinary. No government created that agreement. No central bank enforces it. The whole world just decided and kept deciding for millennia.
It is pure gold, very rare. Hey you, watching this, click the subscribe button and like this video to support our channel.
Here's the thing about gold that most finance videos skip over. People don't buy gold because they think it'll make them rich. They buy gold because they're afraid. In 2008, when the financial crisis hit, the S&P 500 fell 57%. Gold rose 25% over the same period. When COVID crashed the markets in 2020, global stocks fell 34% in a single month. Gold hit an all-time high of $2,075 per ounce by August. When trust in the financial system breaks down, gold becomes the thing people run to. Not because it earns interest, not because it pays dividends, but because it has never, in 5,000 years, gone to zero. That matters more than you think. If you've ever lived through a devaluation, if you've ever watched your savings shrink because a government printed too much money, you understand why people keep gold. It's not about greed, it's about memory. Okay, now the part most gold videos leave out. Gold is not a magic shield. In March 2020, when COVID panic hit markets, gold actually fell 12% in 2 weeks before it recovered and hit record highs. When markets panic, people sell everything to raise cash, even gold. And over the long run, gold has grown around 600% since 1990. Impressive. But the S&P 500 grew over 2,800% in that same period. So gold is not a replacement for investing. It's insurance. You don't buy insurance hoping your house burns down. You buy it so that if it does, you're not destroyed. There are 3 ways everyday people invest in gold. Option 1, physical gold, coins, bars, even quality jewelry, though we'll come back to that. The upside, you own something tangible. No broker, no platform, no internet required. The downside, storage, security, and insurance all cost money, and selling it isn't always instant. Best for someone who wants security they can hold. Option 2, paper gold, also called a gold ETF. An ETF, or exchange traded fund, tracks the price of gold. You buy it like a stock, it moves like gold. You never touch the metal. The world's largest gold ETF holds over $50 billion in actual gold, sitting in a vault. When you buy a share, you own a slice of that. Lower cost, easy to buy and sell. No storage headaches. Best for someone who wants gold exposure without the logistics. Option 3, gold mining stocks. You don't buy gold, you buy the companies that dig it up. Mining stocks can outperform gold when prices rise, but they come with company risk, management, debt, operations. This is the highest risk, highest reward version of gold investing. Best for experienced investors who are comfortable with stock volatility. And your gold earrings? Here is the caveat. When you buy gold jewelry, you're paying for more than just the metal. You're paying for the artistry and craftsmanship. But when it's time to sell, none of that matters. Buyers price it by weight alone, melt it down, and the design disappears entirely. That means the premium you paid, it's essentially gone the instant you make the purchase. Here's a thought experiment. Imagine you had to leave your country tomorrow. One bag, fast. What do you take? Cash sometimes loses value across borders. Stocks live on an app that might not work there. Crypto needs internet and electricity. But gold, a gold coin crosses borders. Every pawn shop in every city in the world knows what it is. This is why gold has outlasted every empire, every currency, every financial system that ever said it was too big to fail. This grandmother didn't invest in gold because she read a finance blog. She invested in gold because she understood something most of us learned too late. Paper promises, metal memory. The stock market can give you wealth. Gold can protect it. You need both. The question isn't, should you have gold? The question is, do you have enough of the right things to survive the wrong moment? A quick but important note. This video is for educational purposes only. Nothing you've heard here is financial advice. Before making any investment decision, please speak with a registered financial professional who understands your personal situation. This channel is not responsible for any investment actions taken based on this content. Do your research, ask the right questions, and invest wisely. If this video made you think differently about how you protect your money, share it with someone who needs to hear it. Watch this next video to learn how to start investing. Subscribe so you don't miss it.